Welcome back to the GMT channel again. We are discussing this on the private equity flow. So we'll discuss till the LP and GP. There are the two partners who invest into the private equity firm. So let's discuss on the deep how GP and LP helps to raise the fund. So GP and LP provide capital to the private equity firm. On other basis, they will charge a return on investment on this fund. So return on investment are usually usually get on the basis of some terms. So those terms are the preferred return, carried interest, or catch-ups, or you can are those calculated with the hurdle rate and all this. So we'll discuss all this part on return on investment when we discuss deeply in the further series. Now GP and LP provide fund to the private equity firm. So what private equity fund do? So private equity fund buy, acquire or invest in any of the company. So which company they will invest? Young company, startup, venture or distressed firm, they invest on the equity part. So sometimes they will invest through the IPO as well. So if new company have the good repo or good unique business, like for trending is if somebody is doing on the business of a renewable energy or infra project, so now it's trending in India. If this opportunity a fund manager got in the private equity firm, so they invest into IPO and sell the share in the stock market and generate the return. Through this acquire, buy, invest, IPO, through this all the program they make a profit, and this profit is distributed to the private equity firm, and private equity firm is again goes to the LP and GP as a part of a return on investment. So return of the investment will discuss on the part of a preferred return, catch up, carried interest and the many more. So be in touch with this whole series. We'll discuss each and every terms of the private equity, how is distributed. Thank you so much for watching. We'll meet you on the next video.